Hi everyone, Josh Gilbert here and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. So let's dive in. Hello everyone and welcome back to another episode of Stock Break with me, Josh Gilbert. Today we're going to be diving into Amazon. It's the e-commerce giant that's transformed now into a cloud and advertising powerhouse. In this episode today, we're going to break down Amazon's business model, we're going to check out its financial performance, look at the competition, and of course, its valuation. And we're going to try and do that for you in all around about 5 minutes. And by the end, we'll have a clearer picture of where Amazon stands and what its outlook might be for you as an investor. And if you're not already, don't forget to hit subscribe to get all the latest episodes. And before we get started, a quick reminder that this presentation is for educational purposes only, should not be taken as investment advice or a recommendation to buy or sell any financial instruments. So let's get into it. Amazon, well, we know it really traditionally as that sort of e-commerce business, right? It once started out as an online book retailer, but now Amazon's business has evolved well beyond online shopping. Its model now stands on 3 major pillars. It's e-commerce, AWS cloud services, and digital advertising. But Amazon is still so much more than that. It still dominates online retail. It holds around about 40% of US e-commerce share, and that's thanks to Prime and its marketplace, of course, of third-party sellers. But again, has so much more than that, right? Entertainment, operations, devices, AI. This business is a lot more than how we once knew it. The traditional business, as we know it, the store for everything and often getting it the next day, that's still accounting for a big bulk of Amazon sales. 400 billion, in fact, of revenue in 2024. That's the key revenue driver. But AWS, Amazon Web Services, this is where we really see much of Amazon's business coming to life. It was an early mover in cloud, and it still holds a number 1 spot. It has about 32% of global cloud infrastructure, compared to about 23% for Microsoft and about 10% for Google Cloud. Basically, it's known for Amazon's profit engine because it operates at higher margins than what retail do. And over the years, they've consistently been a major driver of operating income. For some context for that, it contributed more than 50% of Amazon's operating income in 2024, but it generated just 15% of revenue. That's big numbers, and really goes to show how important the business is. Nowadays, we've got advertising as well. This will surprise some people, but it's actually a digital advertising heavyweight. Obviously, when you search for products on Amazon, you'll see sponsored results. That's part of what is almost a $50 billion a year advertising business. It turns all those sites visits into ad dollars. And also don't forget Prime Video in there as well. Putting that all together, Amazon's model goes across e-commerce, clouds, advertising. It's a diversified empire that leverages one part of the business to fuel the others. So e-commerce helps scale its ad business, and cash from AWS helps fund new initiatives as well. On the competition front, Amazon does continue to face challenges across the board. In e-commerce, Walmart is obviously ramping up its online efforts. We've got Chinese apps like Temu and Shein. These are making big gains. In cloud, we've got Microsoft Azure and Google Cloud. They're very strong competitors, especially with heavy AI investments. And in digital ads, it's up against giants like Meta and Google. But Amazon is holding a lead in each segment, and it's growing. It's not quite winning against Meta and Google, but it's up there. But e-commerce and cloud is certainly doing its job. Let's have a look at the numbers. In its most recent earnings, Q4 earnings, Amazon reported $187 billion in revenue. That was up 10% year over year. Net income doubled to $59.2 billion for the full year, with earnings per share jumping 86%. Full year revenue came in at $638 billion. AWS again led the charge, $28.8 billion in Q4 revenue, up 20%. Its ad business also impressed. That was up 18% in the same period. Overall, look, strong numbers, strong growth across all segments, and a big improvement in profitability would be my takeaway there. But this is a number that I want to focus on. Amazon is expected to spend over $100 billion in 2025 on capital expenditures. That's up a little bit, actually quite a bit, from 2024. Much of this is going to be on AI and cloud infrastructure. Look, this could weigh on short-term margins, but it could pay off over the long term. Amazon, alongside its rivals, Microsoft and Google, are spending big right now, but it's clear that they need to. Demand is outstripping supply in the AI market, so spending is necessary to meet growing AI demand. We're still very early, what I see, in this AI boom, so I don't think investors should be too concerned when demand is this high and is set to continue throughout the year. So how is the stock performing? That's the next big question. Well, over the past 12 months, shares are up about 11%. They've underperformed the S&P 500 in that time. But again, a few issues. Last 3 years have been much better, up about sort of 20% in the last 5 years, up about 100%. So again, still performing pretty well over the long term. From a valuation perspective, the stock trades at a forward PE ratio of about 31 times. Not cheap, but more reasonable than it has been in previous years and reflective of stronger profits. Look, it is a rich valuation, let's be clear, in absolute terms, especially if we compare it to that of the S&P 500. But investors are clearly pricing in Amazon's strong growth prospects and its diverse business. But it is worth noting that that valuation has come down in recent years as profits have grown. Its 5-year average is around about 50 times. So the current multiple, while not cheap, on the surface, it reflects a more mature but still growing tech giant. And if we look at Guru Focus's tracker, it sees Amazon as modestly overvalued at the current level, but it does rank its profitability at 9 out of 10. But on the other side of that, Bloomberg's analyst ratings, well, they're extremely bullish. They have 78 buys, 4 holds, and 0 sells. That's a pretty strong sign of confidence and just shows what could be ahead for this tech giant. Look, it is a tech powerhouse with strength across e-commerce, cloud, and advertising, and many, many other segments of the business. Had a strong 2024, but the outlook for 2025 does remain pretty solid, with analysts clearly optimistic and investors watching how well it can execute on AI and infrastructure investments. But that right there is the important part of the puzzle. How well will they execute is going to be very key, especially with such large investments. And it may put margins under pressure if they don't deliver in the right way. So keep an eye on that and profitability throughout the year. Obviously, the retail segment of the business is going to be very, very important, but AWS is going to be the key driver moving forward. Thanks for tuning in to this episode of Stock Break. Let me know in the comments what you think of Amazon, and to stay updated with all things investing, make sure you follow us on all podcast platforms. Just search for Digest and Invest.